You are listening to Uranium Spotlight, your weekly podcast on the forces shaping the global uranium fuel market, sponsored by PurePoint Uranium Group. Uranium Spotlight isn't just a podcast, it's a platform. Visit purepoint.ca to access in-depth market briefings, sector analysis, and the inaugural Behind the Curve report, understanding when and how the uranium market turns. If uranium matters to you, you're in the right place. And now, your host, Chris Frostad.
It's July 21st, 2026, and this week on Uranium Spotlight, buyers and sellers circle each other while utilities look years down the road. Olympic Dam and Cigar Lake tell opposite stories about two uranium nations. Sprott asks why the equities haven't caught up, and uranium royalty shareholders vote for a transformation. The spot market opened this week at $85.25 a pound U3O8 and closed at $85.50, a gain of 25 cents in what can only be described as a classic summer trading. 8 spot transactions were confirmed during the week, a few more deals than the week before, but they totaled just £500,000, with most of the activity coming in 50,000-pound pieces. Every deal called for prompt delivery, and pricing held in a tight band between $85.20 and $85.50. What is notable is not the volume, it's the posture. Market participants are testing both sides with bids and offers, but with the war in Iran escalating again and equity markets mixed, neither buyers nor sellers are willing to push too hard. The result is a market drifting sideways at the top of the mid-80s while everyone waits for a catalyst. The real story remains the term market, where activity is elevated even though no new demand surfaced this week. A non-U.S. utility is reviewing offers on roughly £500,000 per year from 2027 through 2031. One utility is finalizing a decision on up to £400,000 across 2028, 2030, and 2032, while a second is closing in on an upward of up to £1.4 million beginning in 2028. Behind them, several utilities are working through requests for information, with deliveries starting as far out as 2030 and 2031. Term prices reflect that pull, with the long-term price holding in the mid-90s and 3- and 5-year forward sitting above $100. For investors, the key takeaway is that the quiet spot tape is telling you less than the busy term calendar. Utilities are quietly locking in supply well into the next decade at prices above spot. In this market, it's the security of supply being repriced, not the week's print. Two mines in different corners of the world delivered two very different results this week. The two countries behind them are connected by a shared set of values, but not much else. And the results say a great deal about each nation's prospective future in the uranium industry. The mines are Olympic Dam in Australia and Cigar Lake in the Athabasca Basin region of Saskatchewan. Olympic Dam saw a massive uptick in production this year. BHP's annual results showed uranium output up by more than 15% over last year, and the final month of the fiscal year was considerably more productive than the last 2 quarters of the production at the mine in 2025. But the mine is thriving inside a country that's holding itself back. Australia sits on the largest known uranium reserves in the world, more than 3.7 billion pounds, yet 6 of its 8 states and territories currently ban uranium mining, and the country's response to the global supply deficit has lagged as environmental concerns keep it from exploiting its full potential. Without increased legal support for uranium mining at every level of the Australian government, the sector will remain a mid-level player in the uranium space when it could have a much larger role in getting reactors turned on and getting global economies to net zero within a reasonable time frame. Canada is the mirror image. Cigar Lake resumed production this week after a roughly 2-week suspension, following the restart of the nearby McLean Lake mill, which processes the mine's ore and had been shut down since late June over a failed expansion joint in its acid plant. Cameco, the second largest uranium miner in the world with over 21 million pounds of attributable production last year, has now absorbed flooding at MacArthur River earlier this spring and mill outage at Cigar Lake, operations that each supply roughly 10 million pounds of uranium to Cameco each year. Despite both setbacks, the company is not revising its guidance and says it remains on target to produce 19.5 to 21.5 million pounds this year. Even with these interruptions, Cameco, and Canada in general, remain extremely well positioned. The Athabasca Basin represents one of the world's greatest concentrations of ultra-high-grade uranium deposits, with grades reaching 35% or more, many times what is seen elsewhere in the world. Canada is set to nearly double its uranium production and exports by 2030, a specific government goal, with new mines expected to come online nearly every year in the basin between now and then. Canada and Australia are both uranium-rich, highly developed, and politically aligned on many issues, yet they've taken nearly opposite paths on uranium development. Both will be essential to Western energy security in the very near future, with more than 100 reactors in the EU and nearly 100 in the United States, and with almost no new uranium flowing into the West from major producers such as Namibia, Niger, and Kazakhstan, which have aligned politically or economically with China and Russia as those countries lock up friendly supply in Asia and Africa to feed their own fast-growing nuclear sectors. For investors, the key takeaway is that jurisdiction is becoming as important as geology. The market increasingly prices not just pounds in the ground, but whether a government wants them out of the ground, and on that measure, Canada is pulling decisively ahead. Sprott Asset Management released a video this week on the Proactive Investors channel, making an argument uranium investors have heard before, but rarely stated this plainly. Uranium equities have lagged badly behind the long-term price of uranium. Notably, the video barely mentions the spot price at all, except to say that spot is not a major signal of where the sector is headed, with only about 5% of trades taking place in the spot market. What matters is the long-term price, which is higher now than it has ever been, and fundamentals that Sprott argues are the strongest they've ever been. The more interesting claim is that markets simply have not noticed. Sprott suggests investors have been distracted, first by the war in Iran, and then by the ups and downs of individual AI stocks, and points out that neither factor is really relevant to uranium, before circling back to reconnect the two by arguing that nuclear power is essential to the development of artificial intelligence. In reality, although investors' current interest in uranium is largely tied up in the AI boom, the advent of artificial intelligence and the price of uranium are only tangentially connected. Whether or not AI turns out to be a bubble and uranium price is going to continue to rise for a much simpler reason, prices are still not high enough for miners to start building a lot of new mines, and demand has outpaced supply by a factor of about 30% every year for several years at least, even as utility stockpiles, especially in the West, continue to dwindle. For investors, the key takeaway is that the gap between record long-term prices and lagging equities is exactly the kind of disconnect that does not tend to persist. If Sprott is right, and the market has not yet absorbed how much fundamentals have strengthened, the equities are the coiled end of the trade, and their case does not depend on AI at all. Uranium Royalty Corp shareholders have approved the company's biggest transformation since it went public. On Monday, roughly 99.4% of shares voted were cast in favor of the plan of arrangement that will combine URC with an approximately 92% interest in the Sweetwater entities, holders of Toronto royalty assets and land holdings in Wyoming, Utah, and Colorado, contributed by affiliates of Orion Resource Partners and by HRG Metals, a subsidiary of the Ontario Teachers' Pension Fund, for roughly US $1.14 billion in cash and shares. The mechanics matter. Both URC and the Sweetwater interests will sit under a newly formed Delaware parent, New URC. The arrangement is expected to close on or about July 27th, with the new company's stock trading on the NASDAQ on or about July 28th, and the existing shares delisting from the TSX at the same time. Eligible shareholders will have until 5 p.m. Toronto time on July 23rd to elect exchangeable shares in place of New URC stock. Longtime CFO Andy Marshall will step down after closing, with Eason Chen appointed interim CFO. Why does this matter? URC has been the world's only uranium-focused royalty and streaming company and the only pure-play uranium name on the NASDAQ. This deal deliberately trades that purity for scale, adding a billion-dollar portfolio of cash-generating Toronto royalties and bringing two of the largest institutional resource investors in the world onto the register, all under a U.S.-domiciled, U.S.-listed parent at a moment when American critical minerals policy is rewarding exactly that structure. For investors, the key takeaway is to watch how the market values the combined company once it begins trading and how much of its capital continues to flow towards uranium. The uranium royalty model is not disappearing, but it now lives inside a larger, more diversified vehicle, and the pure play scarcity premium URC once enjoyed goes with it.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape, sponsored by PurePoint Uranium Group. While our passion for the sector is undeniable, nothing discussed here should be considered investment advice. Our mission is to provide a clear, balanced view of the forces influencing uranium prices and the nuclear fuel cycle. For deeper analysis and market briefings, visit purepoint.ca. Join us again next Tuesday for another edition of Uranium Spotlight.